Welcome to Trading Lounge and the Bitcoin report for Thursday, March 17. Now, this particular pattern on the low here, I think it can be counted in different ways. So we're just going to go over those different ways. There's 3 of them. And in due course, we'll be able to eliminate them. And it all really just depends on which side of the 40,000 the market's going to sit. And as you can see at the moment, we've got, well, this is a low here, then we've got this low, this high here, and then we've got this low, and then this is a lower high, and then this is a higher low here, and then we've got this one, and we've got this one. So in a way, it's kind of diminishing into that 40,000. So what we could say is that, a breach of, as it's diminishing into these, we've got some sort of, we could look at it as a sort of a triangle pattern, I get, of coming back from here, I guess, from this point, to be fair. So really, once that gets breached, that gets breached, that gets breached, that gets breached, or that gets breached, or this gets breached, then we've got, a possibility of moving in that particular direction. That would be a very practical way to look at it, because I understand that some of these structures are a little bit hard to count, and they could be this or they could be that. So I think stepping back and being practical and working from the outside in would be one way to look at that. Now, if we take out this top here, well, then we're probably looking at some sort of bullish case, Now, could this be the bullish case with what 1 here and 2 here and 1 here and 2 here and 1 here and 2 here? Possibly. It's a bit of a long shot and don't hold a lot of faith in that particular count, but the stochastics are really kind of settling into for a bullish count in this particular space. So on that note, just looking at this one here, I think I've got it maybe on the 5,000 tick here somewhere. Let's just cruise in and have a little look at some of these counts here. So yeah, in this instance here, we would look at it as 1 and 2 and 1 and 2 here. That would be reasonable, I think, as an A wave and a B wave and a C wave here. It's not very good, so you'd probably have to look at it as a WXY in this. That's why it's not such a good count. But we're starting to get an impulse wave here, so we could look at it like this here. But it's probably more likely to look at this as in terms of a bullish count to the upside. We'd probably look at it as a triangle sort of pattern. So that brings us going back from this particular count here that we just had a bit of a look at here. If we move to another bullish count, then we could look at, which we've had here for a little while, is this triangle pattern here. Well, we'll put this wave 4 over to here, and we would look at this here as a D wave and an E wave over here, and then to the upside at this point. So that's a possibility as well within that space. So based on that, if we have a look at that on a sort of intraday scale here, then it would look a little bit like this here. So, well, let's just get in a little bit more data here, I guess. So straighten this up a little bit. We looked at this yesterday, I think. So looking at this as a W and an X and a Y here for another W, and then a WXY here for an X, and then looking for the Y up there here, which would make the wave D up here. So I'd need to reduce these by 1 degree of structure. But yeah, in this instance, we could look at it like this as a triangle pattern, and then we'd also be looking for another move down for wave E here to have that wave 4 over here for this, so to speak. So that would be that sort of light, basically a shell of a pattern to the upside in that triangle pattern. So yeah, look, once, if we took out that top there, then this count or the other bullish count would play out, and there's nothing wrong with tracking 2 bullish counts to the upside. I think that's fine. This one's more probable. Like I said, I have to drop it down 1 degree of structure, but that's okay. So taking that top out there would kind of put us in that space, you know, because that low, this low, this low, and this low, they've all been higher lows. So if any of these were breached to the downside, that would kind of give it a bit of a bearish twist, wouldn't it? But this high, this higher, this higher, this lower high and lower high, if they were breached, then it would kind of go, well, you know, that would prick your ears up and say, well, shit, that's got to mean something, doesn't it? So that would be to the upside at that point. So look, they're the two counts to the upside. And as I mentioned, what happens if, you know, because this is in line with equities, we've got to count in equities where this just goes up for maybe another half a session and then comes down from that point. So taking out that low there would give us a bearish count at that point. So we need to accommodate that as well. So that would look a bit like this here. Also, I mean, we'd been looking at this in two different ways. This is an expanded flat correction with wave 3 here, an A and a B and a C wave down here. So we had been looking at this in two ways, and we're kind of eliminating one of them. So we had this as wave 4 over here with 1 and 2 here and 1 and 2, but it's not really counting nicely as 1s and 2s there. So we really got to put this over here for wave 4 as a triangle pattern going to the downside. Pop that in there. So like I said, if we do, you know, we are getting a rally here, of course, and we're getting that in equities, but if that fades, and there is a count for that in the equity market, in assets, then, and if this low here is breached, well, then we can expect to come down into 28, 30,000 at that point, taking that low out and taking these lows out here. So let's just say 25, you know, but we just got to count the waves to see, you know, where, you know, and get some understanding of it at that point. You know, we can get a ratio from wave 4 high here coming down and so on, but I'm not going to do that at the moment. So this particular pattern here, I think that it's, you know, it's got legs, and let's just go to the intraday and just check on that a little bit and have a look at that, get some idea of what we're looking at within that structure. So here we'd be looking at wave 3 here with an A, B, C, D, and E wave here. So a little bit sort of complicated in here, but yeah, I'm thinking, well, first of all, this particular spike here, it was obviously sort of news driven. It was chuffing along, doing its sort of thing, and then it's. I think it's not interesting that the fact that it just popped up like that, but it's more interesting that it came back down into the channel, isn't it? It's sort of like it had this channel here, and that's where it was sort of, you know, it's interesting how it just came back into the channel here. So this is why a lot of the times I don't worry about this counting the spikes, you know. I mean, when Elliott, you know, discovered the patterns that he was looking at, you know, he wasn't looking at them with, you know, highly leveraged products, you know, and, you know, large orders moving, you know, one large order moving the market around or something. So it wasn't like that. So I've always been in the you know, the vein of like not to worry about them too much, but you know, you can include them in there. It's no sort of biggie, but I just look at it a bit more sort of philosophical like. So yeah, so from wave D here, we can look up to the 61.8%, which brings us in around the 42,000. And that's where we're kind of looking for equities to top out as well. So I just think we'll just give this a little bit of time. Let's just, let's see how this, I look at this as 1 and 2 here, and 3 and 4 and 5 here. This is probably not finished in here. I haven't really pulled that apart. Looks a bit corrective in there, I'm not quite sure, but let's just see how it plays out within that space there, and let's see it come back and test the 40,000. But as just generally speaking here, as an A, B, C, D, and E wave here, I think that's doable, you know. So let's just see how it plays out at this level here. One of the other points too to the upside is that we've got 40,000 is a medium level 4, and then we've got minor group 1, which is 41 here, 42 and 43. Now that this whole pattern across this level here, because it is really just, when you look at it, it's basically just snaking along the medium level here, isn't it? You know, that's its balance line. Well, the balance line we talked about yesterday was around was a little bit higher up from because 38 there. 38's the important number, and so is 40. But the actual balance point for all of this was around the 39, which brought us in around here somewhere. And you can see that the reason I got that was just really taking this low and this high here and looking at the 50% here. So we can see that if you take a closer look at that, we can see that, you know, it's got some gravity here for that, so it played a sort of part. But in terms of trading, I take on the psychological event of it, and the 40,000 as support or resistance is more, you know, carries a little bit more weight than that. But it's nice to know where the balance point is, and so realistically we're above the balance point at the moment, so that 39 will be important to the downside. But look, coming back to the triangle pattern here, you know, it's got half a silly chance of being sort of there, and we'll just see how this plays out here. Yeah, what I was going to say, because this has matured across this level here, you know, it's come down and it's found some, you know, support here to a point. We don't know if it's support yet. It hasn't really tested the 40,000 and sat there. The other thing that I'd want to see now is, as I mentioned, taking out this high and this high, or getting support on the 43 there. A classic trading levels pattern on the 43 this time around would be what I'd be looking for to go long at that point. But otherwise, yeah, we'll just see how this plays out. It could just fade up here in line with equities and then move on lower from that point. So we'll just give it a few more sessions, and yeah, all will be revealed. But it's nice to shoot the breeze about the certain patterns, and you may have a pattern that you're following as well. And yeah, so I hope that plays out for you. But look, you know, when things get complicated like this, it's good to share ideas and have a look at all the possibilities, and not just marry one side, because that can get you into strife, you know. So as I always say with corrections, they'll mature to a point that they can only be one thing, and then if you've been patient, then we can just move in on that flow. But from corrections, trends are produced. Alrighty, cheers.